picture this exact scenario. You are sitting there with a FICO score of 540.
Oh, man. Yeah, that is a tough spot to be in.
Right. You just got your third bank denial this month.
Which is incredibly frustrating.
It really is. But you actually have a shipper contract sitting right on the table. They need a truck by Monday. And, well, you just do not have one yet.
Honestly, that driver is only about 3 weeks from a finance truck. He just needs to stop talking to banks. Banks are just not the right lender for new truckers.
Wait, really? So who is the right lender then?
Equipment finance companies are. They change the whole game.
Welcome to the Deep Dive. Today we are exploring the Trucking Capital Playbook Part 3. We are uncovering exactly how truckers with bad credit still get their first truck.
Yeah, this is a big one.
It is. This is specifically for you if you have a shipper ready. Do not let a sub-580 FICO score stop you from getting on the road.
Exactly. So let us look at why banks just crush new trucking startups. Basically, banks want a 2-year operating history.
Right, which a new driver obviously does not have.
Exactly. And they demand like $250,000 in revenue, plus they require a 680 FICO score minimum. A new trucker has none of that.
You just have your CDL, some ambition, and a shipper ready to give you work.
Yeah, but the bank sees no track record, so they just shut the door. It is crazy, but 95% of trucking companies get denied by banks.
Wow, 95%. That is massive.
It really is. But the real story is that you are just at the wrong lender.
I mean, I kind of get why banks are scared. We know the marginal cost of running a truck. It's like $2.01 per mile. You need serious capital to run these things.
You do. But going to a bank for a trucking loan is, well, it is like ordering a steak at a vegan restaurant. You are just in the completely wrong place.
That is a great way to put it. So if banks will not take the risk, why would anyone else?
Well, because traditional banks underwrite the trucker. Equipment finance lenders underwrite the actual truck.
Oh, I see. So the truck is the collateral.
Yes, exactly. Equipment financing is not a traditional business loan. It is a secured loan. The truck itself acts as the collateral.
So the lender actually holds the title to the truck.
Right. And if you default on the loan, they simply repossess the truck.
So that structure basically changes all the rules.
Completely. FICO scores down to 580 are easily accepted. Having 0 time in business is totally fine. Even $0 down is possible on the right deals.
That is incredible. How fast can you actually get a decision?
You can get decisions in 24 to 48 hours. You do this through BusinessLoan.Directory's 75-plus lender marketplace.
So you just go to BusinessLoan.Directory and access the marketplace.
Yeah, it connects you directly with specialized lenders. So let us break down the actual math here.
Okay, let us do the math. A new Class 8 sleeper costs around $180,000 to $200,000.
Right. And a used truck that is 2 to 3 years old runs about $90,000 to $120,000.
So let us look at a $180,000 truck. Say it is at a 12% APR over 60 months. That equals about $4,000 monthly.
Which sounds super scary to a new driver.
It really does. That is a huge monthly payment.
But you have to look at the revenue reality. One solid contract pays $12,000 to $15,000 monthly.
Oh, wow. So that single contract covers your truck payment 3 times over.
Exactly. The incoming cash flow justifies the debt. Plus, there is a massive tax advantage we have to mention.
Oh, right. Let us talk about Section 179.
Yeah, Section 179 of the tax code is huge. It allows you to deduct the full purchase price in year 1.
Wait, the entire purchase price? So you can deduct that whole $180,000 in the first year?
Yes, you absolutely can. It is a game changer for keeping your revenue.
Okay, I have to ask, though. Is this too good to be true? I mean, why does a lender feel safe ignoring a terrible FICO score?
Well, it reveals a crucial truth about collateral. A physical asset is just stronger than a 3-digit number.
Because equipment lenders do not care about FICO like banks do.
Right. A truck has a published wholesale value. It is tracked by a VIN. It can be repossessed and resold within 60 days.
So it is much stronger collateral than a bank's general business loan.
Exactly. The lender knows the exact asset value at all times. They recover their money even if the operator fails.
So a 540 FICO borrower with a strong shipper contract is actually less risky.
Yeah, they are less risky than a 720 FICO borrower with no contract at all.
That is wild. So the whole mindset that bad credit means no trucking is totally wrong.
It is completely wrong. The truck is the collateral. The contract is the revenue proof. FICO is merely a tiebreaker.
It is never a gatekeeper in this space.
Yeah.
It is like the truck is a hostage that pays its own ransom.
That is a perfect analogy. The physical asset guarantees the money, not your past mistakes.
So what happens if someone gets desperate? Like if getting a physical truck is the only goal. They might fall for a lease program, right?
Oh yeah, the carrier lease-to-own programs, that is a massive trap. You have to avoid those.
Predatory carriers offer these no credit check, drive away today deals.
Yes, and they target desperate drivers. The trap relies on weekly payments and a huge balloon payment at year 3.
A balloon payment just sounds dangerous.
It is, because the carrier owns the truck until the very end. One missed week triggers immediate repossession.
So if your truck breaks down and you miss 1 week, they take it.
Yeah, and the operator loses every single dollar paid in. You have zero equity.
That is brutal. So equipment financing through a real lender is completely different.
Totally different. The trucker actually owns the truck. You build real equity from day one.
And you build business credit too, right?
Exactly. Future trucks are much easier to finance because of this payment history.
But how can a desperate driver tell the difference? How do you spot a predatory lease trap?
It comes down to who holds the actual title. In a real finance deal, you hold the ownership.
Okay, so we know the safe route now. We need a map. Let us go over the 4-step qualification process.
Perfect. Step 1 is confirm support. You need current trucking revenue or a shipper contract.
Would a letter of intent work too?
A letter of intent works great. The floor is basically $20,000 in monthly projected revenue per truck.
Okay, so what is step 2 then?
Step 2 is right size your rig. Do not just buy the biggest truck out there.
Right, because long haul needs a sleeper costing $180,000 to $200,000, but local routes just need a day cab.
Yeah, and day cabs run $80,000 to $140,000. Plus, buying a 2 to 3-year-old truck saves you 40%.
What happens if a new driver skips step 2? Like, what if they just buy the biggest, shiniest truck available?
Well, over-leveraging kills profit margins immediately. The payments will bankrupt you if freight dips even a little.
That makes sense. Keep costs low. So step 3 is gather your documents.
Right. You need 3 to 6 months of personal bank statements. Get your ID and your tax returns ready.
Grab your CDL, DOT, and MC numbers too. Have your insurance quote and shipper contract ready to go.
Preparation is key. Then step 4 is to pre-qualify online. You just go directly to BusinessLoan.Directory.
That takes just 2 minutes, right?
Yeah, just 2 minutes. And there is no hard pull on your credit.
That is a huge relief. So it will not hurt your FICO score to check.
Not at all. Just enter your trucking details and equipment needs. Put in the truck price and your shipper situation.
And BusinessLoan.Directory's 75-plus lender marketplace matches you up.
Exactly. Following these 4 specific steps fundamentally changes your future. Let us look at where you will be in a few months.
Yeah, let us fast forward 6 months from now. The truck is officially yours.
The shipper pays like clockwork. Your 6th on-time payment just cleared the bank.
And your business credit profile is rapidly building up.
You are probably already eyeing truck number 2. On-time payments will improve your terms on the next one.
You experience a massive identity shift. You go from a CDL holder asking for permission to a fleet owner setting the terms.
Exactly. On Saturdays, you are not stressing over applications. You are actually planning next week's route.
Because you used BusinessLoan.Directory, your capital is finally doing capital's job.
It really is. You are building real wealth.
If you made it this far, you're serious. Subscribe. We drop new funding strategies every week for trucking CEOs who refuse to let a credit score decide their future.
Go to BusinessLoan.Directory now. Put in your trucking details, equipment financing needs, truck price, and shipper info.
It takes 2 minutes and there is no hard pull.
Yeah.
Have your CDL, DOT, MC, insurance quote, and contract ready.
The bank said no, but the lender who actually understands trucking is about to say yes.
That is a powerful shift.
It is, and I want to leave you with one last provocative thought today.
Okay, let us hear it.
What if the banking system's blind spot is actually the greatest wealth-building opportunity for the modern working class today? Think about that next time you hear a no.